Welcome back to the Real Estate Sitdown. This is episode 39. I'm Blair Berg, and this is Amber Perez. How are you doing today, Amber?
Doing good. How about yourself?
Doing well. It's a busy Monday. So.
It is, yeah.
So I'm a little scrambled here this morning. Just kind of been running since about 5 a.m. here. So the interest rate for a 30-year conventional fixed-rate mortgage is 7.08.
Coming down?
So it's down from last week by about 0.1.
Yeah.
So that's good.
Coming down.
Yeah. Good indicator there as we move into the spring market, which is a good thing as, Amber, I think you kind of want to talk about some offers you've been writing recently.
Oh my gosh, yes.
The market's been a little crazy for you.
Jungle out there, yeah. So I've noticed there's actually a pretty major difference in the two markets that I'm practicing in. Obviously, I'm practicing here in Minnesota and Minneapolis, but I'm also still practicing in Hampton Roads, Virginia. And the offers that I'm writing here would mop the floor with the other competitors in Virginia Beach. It just would. I think I saw a thing on Facebook the other day because we have a Hampton Roads Mastermind Facebook group, and they posted in there that Virginia Beach was the third most competitive market on the East Coast.
Interesting.
And they're writing an offer for $20,000 over asking would get it. Here, you're going to lose in the cities for a house that's recently renovated if you're offering $20,000 over asking.
Yeah.
I mean, Josh and I just went under contract, and we had to end up paying $40,000 over asking for a place in Richfield.
Yeah. Yeah, and so for anyone thinking out there, anyone listening out there that's thinking about selling your home, getting ready to list for the spring market, I think it's time to talk to your agent, get ready to list your home, get it staged, get it ready, because the spring market is here.
For sure.
And the weather's starting to warm up. There's more activity, especially like Amber said, more in the cities. And I think agents especially that have been doing real estate here for at least the last 5 years, they've seen now prices have gone so crazy from the pandemic. Then it really slowed down. Now it's starting to pick back up again. And I think if you can talk to your buyer and get them to realize, like, you don't want to overprice your home right away.
Right.
You want to underprice it, if anything.
For sure.
To get that bidding war going.
It's going to scramble people, for sure.
Yep. You get more eyes on the property, people that, it fits more of their budget. And then if they really like it, then they can see, all right, maybe we can afford a little bit more home. So people who originally went through and looked at it at the price that you're going to get for it, they've seen it, they've fallen in love with it, so they're more likely to write on that.
Right. So I do caution with underpricing, because you don't want to underprice it too much.
Yeah.
Like, obviously, if your house is worth $450, don't price it at $400.
Yeah.
Because the people who can afford $400 and that's their max are going to try and compete, and it's unfair to those individuals. And you're not going to get the most for your home if you do it that way. But if you're listing at like $440 and it's worth $450, like, that's acceptable.
Yeah. That
is definitely acceptable. Just don't drastically underprice it to start a bidding war and get people's hopes up, because behind these offers there are families behind them.
Yeah, for sure. Yeah, no, I'm thinking more of like a 450 if you're thinking 450 is your max, kind of around the 425 mark.
Yeah. So
there's some leeway there and get more eyes on it. But yeah, ultimately it comes down to like what you need to get out of it, what your agents found in comps, stuff like that.
For sure. I have noticed too, like, the further out from the cities you are here, the less likely you are to create the less likely you are to create a bidding war on your home. Like Fairball, for example, I have a deal out there that we ended up getting it for under asking. But that's not the case within the cities. It is it's a wildfire in the cities.
Yeah, and I closed on a Faribault home next week, and we went under on that as well. I'd actually been on the market for a while, but I mean, it's a really nice 10 acres as a 2014 build.
Nice.
So they're not going to break the bank on it, that's for sure.
That's phenomenal.
Yeah, so the more rural areas here in Minnesota, you can definitely get away with a little bit more of a deal as you move further south.
Yep.
I closed on a property in Mound today. In that we went 5 over, but that's just because we saw it the day it came on, and it was a Friday. And my client was willing to go a little over, and he really wanted the property. So I just said, hey, if we go 5 over today, will you just shut it down? Take no more showings the rest of the weekend. And he agreed to that.
That's cool.
So, yeah. So could we have gotten that list? Maybe, but this just gave my buyer the sense of security. He didn't have to wait on pins and needles all weekend to see if he got it.
What did your contingencies look like on that?
We had a regular financing contingency, 7-day inspection.
Okay. Was it info only, or
no.
did you ask for repairs?
We had some repairs.
Okay.
But it only ended up being a GFCI outlet for the sump pump.
Yeah,
so
that's nothing.
Yeah. Our inspection contingency, our finance contingency. I think that's it. Yeah, he didn't have a home to sell or anything like that.
That's
so
great.
It was a pretty clean offer.
Sounds like it.
In terms of inspection stuff. But like I said, I mean, that, I think during the pandemic, or if you're buying in the cities right now, that wouldn't get it like shut down for the weekend.
No, it absolutely would not. I think if you're buying in the cities and you're trying to shut it down for the weekend, you're giving your left arm to make it happen.
Well, you even said so, and I don't, it's your deal, so I don't want to give too many of the details. If you want to talk about it,
yeah, I can talk about it. I don't mind.
But it sounded like you went under contract on the place over the weekend, and you actually had to use an escalation clause.
I did, yeah. Our original offer was only $10,000 over asking, but we escalated up to $40,000 over asking. We agreed to pay $5,000 over the highest offer, and the highest offer was actually a conventional that we beat out. They were putting 25% down, and we're using my significant other's VA loan. Shout out to the VA loan, because that's my favorite product. And there was a few things that clicked with the sellers, so it's an emotional sell for the sellers. And there was a few things that were emotional behind our offer, and I was able to humanize us a little bit, and ultimately we won because of that negotiation tactic. We realistically probably shouldn't have won on paper. But because I was able to humanize us a little bit and tap into that emotional connection that the seller has to the home, even really without knowing that it was an emotional sale, we were able to make it happen.
Well, and I know there are a lot of people out there that are scared of using a VA loan compared to like a conventional, and you think it doesn't look as good because you're going to put money down, stuff like that. But a lot of times you run into, they have veterans in their family and they want to work with another veteran.
Correct. That's exactly what happened here. So the seller had a Vietnam vet in the family, and there was Vietnam memorabilia, like Vietnam War vet memorabilia all over the place. He was a Marine. So we saw that, and we were immediately like, they understand a VA loan. They understand the connection that service members have. And, we at least have a shot here. Yeah. That was the mindset going in. And, I was very openly communicating with the listing agent about our offer and about who we were and how well qualified we are and so on and so forth. So having that ability to be essentially an open book with the other side really helped our case.
Yeah, and I think, too, another big thing that I don't think enough people do, I think I saw that you'd posted, you made sure your lender contacted the seller, which is huge.
Yeah, he harassed the poor guy. He called him, texted him, and emailed him.
Well, I think that's important because, and I know we talk about it with our lender and our team trainings all the time, that there are so many lenders out there that are writing bad pre-approvals.
Yeah.
So having a lender call the seller and actually say like, hey, no, we've already run their documents. This is pretty much already underwritten.
Yep.
And this is a clean loan. That goes a long way, because
it does.
If you get 5 loans, if you get 5 offers on a house, you don't know which ones of those have already been underwritten. Is someone just using a pre-qualification? They only have verbaled their income. Who knows?
Right. And is the lender experience, that's another concern. Like when I list properties, I want to know the lender. Who am I working with? Do I have that lender in my phone? Do I know this individual? So I had an offer come across on a listing in Virginia over the weekend, and I'm Facebook friends with the lender that the buyer has. So of course I picked up the phone and I called him, and I was like, hey, Ben, talk to me about your borrower here. Like, are they qualified? Do they have cash reserves? Like, what's going on here?
Yep.
And of course, he can't give me too many details, but he can say, hey, like, if this doesn't work out, we have other options
Yep.
for it. Like, we don't have to go conventional with this person. We can go FHA and first time home buyer programs. Like, there's other options, so we can negotiate if needed. Unfortunately, the buyer ended up walking because we were in a multiple offer situation, and we countered back with the same counter to 2 different people.
Okay.
And then we ended up getting another counter back from the one that didn't walk. So we're going under contract on that today. But anywho, it's important to know that the lender's experienced and can be creative when need to be. And I'm not saying creative as to the point where they're breaking laws. It's just they know their products and they can they know the person's situation. They've had conversations around this, so they can better fit the person to the product.
Yeah. Being knowledgeable about programs and products is huge when it comes to being a lender. I know for a fact when my girlfriend and I were buying our duplex, she's a regular W-2 employee. So
makes it easy.
Yeah, it made it way easier. So we didn't even get my income involved. I'm on the mortgage and title and everything, and obviously I pay it, but we just didn't want, we didn't want to muddy it with the 1099.
We're doing the same with Josh and me.
Yeah. So we were working with 2 different lenders, and there was a program the one lender was more familiar with that actually got it done. Like,
right.
The other lender's like, I'm not seeing it. I don't know how I'm going to get these numbers to work. I'm like, well, I have another lender that's on the line, like the other line that's telling me they can do this.
Right.
So we ended up, the one lender just said they straight up couldn't get it done. The other lender did, and we closed just fine.
Yeah.
There was no problems like at any point in that. And I think, so kind of on the flip side of what you're talking about, partnering with an agent that has good relationships with lenders is huge.
Absolutely.
And I think having relationships with multiple lenders.
For sure.
Because there is always different things. And I never like to give someone like one lender and say like, you have to use this person.
Right.
I recommend people that I have worked with and I've worked with successfully.
And you can get it done.
Exactly.
Yep.
So, I mean, I had a deal recently that I'm closing on next week that the buyer came to me already pre-approved through an online mortgage company that generally I wouldn't use.
I have a feeling I know what lender you're talking
about.
But
he was already pre-approved, and I did talk to the lender, and he seemed perfectly fine.
Sure.
He seemed fine, but it was just through a company that I normally wouldn't recommend.
Sure.
But I have good relationships with my other lenders, and I kind of told my one lender to be on backup just in case something falls through, because if you are using these online lenders, a lot of times you don't know something's wrong until it's like the day before closing, and now they're like, oh, we didn't have this document or something. So I've kind of told them like, hey, be on backup because this might fall back on you. And I could tell when we got the offer accepted, the seller's agent wasn't
100%
pumped.
Excited about it. Yeah.
Wasn't pumped on our lender, but I did tell her, I was like, hey, I have another lender on backup if this doesn't work out.
Right.
I was like, this is a very well approved buyer, great financial situation. So it's like, it will work. It's like, if it's not this lender, and then that made a huge difference. She's like, okay, great.
Sure. Yeah. And a lot of times it's being transparent with the list agent too. Like, I'll be honest, the lender that we're using for Josh and I, he's my lender from Virginia. Mm-hmm. He just got licensed in Minnesota, but I know how he operates and I know what to expect out of him. And I know that our file was pretty much underwritten prior to us even writing offers. So we knew exactly what we could go up to, how close the line was, where's the gray areas. We knew everything going into it. And I mean, we've been going back and forth with my lender, Jonathan, for probably about a month and a half just on scenarios. And then this duplex just fell in our lap essentially. And we were like, this is the perfect one. We have to move on it.
Yeah.
So it is super important to have that great relationship with your lender so you can be fully transparent and you can go ask the difficult questions that, you might not feel comfortable talking about otherwise.
Mm-hmm. Yeah. And that's what I think it's huge and that should come up. And I know, and this is going to be something that's like, you've never seen the video. So then when it happens to you, you don't know what you don't know. But if you are for some reason watching this and you don't have an agent yet and you're thinking about buying, this should come up in your agent interviewing process. Like if you are interviewing agents, ask them like, what do your partnerships look like? Do you do you have a lender that you work with? Do you
title
have
companies,
title companies,
home inspectors?
Yep. stagers, all that kind of stuff. So,
Yeah.
and I mean, that's something that I'm proud that I can like offer to my clients if they ask me like, hey, do you have a name for this? And I can give them one right off the top of my head.
Sure.
So yeah, that ask who their lenders are, their inspectors, their stagers, their title company. Because most of the time, I think, because you might know an agent, you might know someone in lending. It's very rare. I feel like you know a closing agent, like you know a title agent.
Yeah. So I have a really good relationship with a title agent in Virginia, and I send her all my stuff.
Yeah.
And she actually is the CEO of Rocket Title out there, and she is on it. I can call her at 10 o'clock on a Friday night, and she's going to answer my phone call.
Well, that's what I mean. I think the common person, like outside of being a real estate agent, like probably doesn't know a title person.
Right.
So I think that's huge. And most of the time, it's like your agent is just kind of picking a title company for you.
Right. Yeah. Most of the time, your agent will just pick a title company for you, unless you
have,
specifically say like, "Hey, I want to use XYZ title
Yeah.
on Main Street in Minneapolis or whatever." So unless you already have one pre-picked out, your agent's going to just send you to somebody. Like here, where I've got 2 different title companies that I've built relationships with already just in the month and a half that I've been here.
Yeah. Well, it's funny too. So you asked earlier, I actually do have some comments that's kind of relating to what we're talking about right now.
Yeah.
So I guess we will hop into the comment section.
Yeah, let's do it.
So we were talking about how competitive the market is, and just kind of in comparison to like the pandemic when it was really competitive.
Right.
So last week I had put out like a meme that said people who bought homes in 2021 recalling how competitive the market was. And it's some guy just saying like how bad it was.
Right.
So I actually had some people going back and forth with each other in my comments. Someone said, just wait until interest rates go down. And that's kind of what we've been saying for weeks.
Oh my gosh.
Yeah.
Yes.
Yeah. So then someone said, and I loved this answer because it's actually pretty knowledgeable. Someone said, if interest rates go lower, demand for houses goes up, which means house prices go up.
Yeah.
Let me repeat that. If interest rates go lower, demand for houses go up, which means house price goes up. You can refinance a bad rate. You can't renegotiate a house price. Bingo. And that's what we've been saying for months now.
Yeah. So that's Josh's concern whenever we were putting in our offer was, what's our APR look like? And I looked at him dead in the face and said, it doesn't matter.
Mm-hmm.
It doesn't matter because we have full intentions on in 10 to 15 months refinancing this place.
Yeah.
It does not matter what our interest rate is today because we have a plan to refinance in the future. What matters is, can we afford the payment today?
Yes. And that's exactly what I always say is that, well, and as that person said, you can refinance, but you're not going to renegotiate on a price that you bought it at. So buy now while prices are still a little bit lower and you can get into a rate, because the thing is you're getting qualified, you're getting approved on a rate.
Yeah.
So if you keep up with your financial situation, you should be able to afford those payments.
Bingo.
And that's why I'm not suggesting you go out and buy more than you can afford. Hopefully you're following good financial habits, and by following that pre-approval, you're buying within your means.
Right. And don't max out your pre-approval either. Shop underneath your pre-approval, because that way you're not maxing out your DTI.
Yep. So then if you buy within your means, a year, 2 years go by, and then you can refinance. Well, now you've got that good price and you have a good interest rate.
Yep.
And as that person said, and I'm glad there are more people, because most of the time I get comments like, oh, blah, blah, blah. Like buying a house is so easy. Like this is just realtors talk to try and get you to buy and get you stuck in a bad rate. We're not trying to do anything like that. It's like that is how it works.
Right.
If the interest rates go down, prices will go up. It's supply and demand.
It is supply and demand. And a lot of people don't look at the situation as a whole. So I put out a TikTok several months ago that I got the information from MBS Highway, which is a Barry Habib. He does like predictions on the housing market and interest rates and stuff like that. He's very, very knowledgeable. And he was talking about the birth rate. So the average first-time home buyer is about 33 years old. That is the average age of first-time home buyer. In 2006, when the market started to crash, 33 years prior to that, abortion became legal. So with that, there was a dip in the population. Builders were still building at their maximum capacity at that time. So when the bubble popped essentially because of, subprime loans and all that, and there was a dip in the population, there was more supply on the market than there was demand, which is what happened. Now, fast forward, builders are building at half the rate of what they were. And with that, we've got double the population than there was of first-time home buyers back in 2008 and 2006. So we have a supply and demand issue. We don't have the supply, and we have a surplus of demand. So that's why our market isn't going to fail anytime soon. Sure, historically, every 30, 60 years, whatever, we do see a decline, but usually within 2 years, the market is back up. Yeah. It doesn't take long.
Yeah, no, completely agreed. And yeah, it just goes back to what I preach every single week. Interest rates go down, prices go up. Buy when you can. Don't wait for an arbitrary number drop.
Yeah, buy when you can is super important. So don't go out there and buy because we're telling you to go buy. Like, that's not the right way to do it. You buy when your life says, okay, it's time to move on. We need to do this.
Yep.
If you're 35 years old and you're still renting an apartment, so be it. It is what it is. Maybe you're not ready, or maybe you're going through something. Don't buy because we're telling you to buy. You buy when your life tells you you're ready.
Yep.
Everybody's life is different. Every circumstance is different. You have to do what's right for you. And if you have a family, your family, at that time.
My only thing is, like, if you are capable of being a homeowner, you want to be a homeowner, don't wait just so you can say, I waited for interest rates to come down.
Yeah, that's stupid. Yeah. Like, that's, I hate to say it that way, but that is stupid. Like, waiting for interest rates to come down.
Just to say they did.
Yeah, so you're gonna wait for interest rates to come down, but you're gonna pay $20,000 more or $50,000 more for your house.
Well, and I think what people don't really understand about the flip side of that is that during the pandemic, when you were buying houses, let's say it was at 500 and you had to go up to 570, and you did an appraisal waiver, which is, so for people that aren't privy to that information, an appraisal waiver or an appraisal guarantee, gap guarantee, is where if you bought it at 570 and it only appraises at 540, well, now you're saying that you agree to bring that extra $30,000 to the table in cash.
Yeah.
Because it doesn't appraise that amount. The issue with that is, even if you can afford it, now you are negative equity on the property from the very beginning.
Yeah.
You're in the hole $30,000, and that doesn't take into account, like, let's say the housing market does go down a little bit next year, or something like that, where now it's going to take longer to recoup your finances from that property. So it's hopefully you want to stay there for a long time.
Yeah.
Because you're going to have to, the bank already is telling you it's not worth what you're paying for.
Bingo.
This is a warning to you. It is not worth what you're paying for.
Yep. And on average, the American family moves every 7 years. So that's important to think about as well. Like, how long are you planning on staying in the house? If this is your forever home, pay over appraisal.
Yep.
Go for it. Why not? My other input that I'd like to say on that is, you don't have to guarantee the entire appraisal. You can guarantee like $5,000 over appraisal up to your purchase price. That way you're not paying, like, if let's say 400, right? The purchase offer's 400,000 and the appraisal comes in at 398, and you agreed to pay up to $5,000 over the appraisal, capping at your purchase price. You're only bringing that $2,000 to the table. So there's ways to spice up your offer to make it look good for sellers, but still protect yourself.
Yeah. And the only reason I bring that up is just to say, if you buy now with a little bit higher interest rate, it's way less likely that you're going to pay over an appraisal price. Because just the way that I look at houses, I look at all my houses as an investment.
Yeah.
I'm not paying over appraisal.
Sure.
I'm just not going to do it, because that already, it doesn't pencil for me then, because it will be way harder for me to recoup that. And it's like, at some point, if I want to do a cash out refi or a HELOC, it's going to be way harder, because you have to have equity in that property, and you already are negative from day one.
So what Josh and I did with our appraisal, since we're doing the VA loan, if the appraiser has a hard time finding comparable properties, he will call, or he or she will call what's called Tidewater. And when that happens, they go, hey, Mr. or Mrs. listing agent, we can't find the comps to support your purchase price. Can you please provide those for us? And then the listing agent has the opportunity to provide those comps. So I agreed with the listing agent. If that happens, I will help fight for the value of that property, because it is in my best interest to make sure that I have a roof over my head. Now, if the appraisal still says, or if the appraiser still says, sorry, I can't, these comps don't work, I don't find the value, we can still write to the VA at that point and say, hey, this is our situation, kind of give them a little bit of sob story and see if they'll give us some, if not all of the value, and just wave it through. Because that is a thing with the VA.
Yeah, no, for sure. And like I said, it's the reason for an appraisal too is to keep you safe, obviously, when buying a home, so that the value is there.
Right. And the lender doesn't, or the lender being the bank or the mortgage company, doesn't want to overpay for a property. So when they order an appraisal, it is directly to protect their investment. Because if you don't make your payments and they have to foreclose on you, they need to know that they're going to get the value back out of the house. No bank wants to own a home, though. They don't. They are not in the business to own homes. They are in the business to lend money, and they do not make money when they own homes.
Yep. No, for sure. I mean, I just when I bought my duplex, I was psyched because I think we got it for $385.
That's awesome.
$389 maybe, and it appraised at $420.
Ooh,
so
that's a winner.
Yeah, so right away, and that was before we did any updates because it was also needed work.
Yeah.
So we've made some updates, and that's the plan, is to do a cash out refi if rates drop low enough. But
nice.
If not, I mean, we might pull a HELOC too, or buy our next one with something
else.
So is
your plan to pull the HELOC while you're still living there, or are you going to pull the HELOC after you move out? Because it is harder to get a HELOC when you move out.
Well, while we're living there,
yeah,
then use it to buy the next place.
Yeah. For those of you who don't know what a HELOC is, it's a home equity line of credit. And it's usually good for a certain amount of time. So I've seen them up to 10 years.
Yeah, I don't want to have to do that. I would much rather do a cash out refi, but rates aren't dropping as quick as I thought they would, which isn't a huge deal. I mean, we have some cash in reserves too that we could use in the right place, but we would like to be out of our place this summer or next fall. So we're just kind of waiting on some rates and some things. Well, and we have to finish up our year there too.
Right. Yeah.
So because we did homestead it, owner occupy right now. So.
Okay, that's what we're gonna do too. We're gonna homestead ours.
Yeah.
And we're gonna owner occupy for a year or two.
Yeah. So. Yeah. Also, the projects have gone a little bit slower than I thought, so we have some stuff to do before we move out. But
Josh wants to do a lot of stuff to our place too. He's like, we're putting marble in the bathrooms. I'm like, you realize we're going to be putting tenants in there eventually, right? Like, why do you want to put marble in the bathrooms?
And that's the whole thing too. Is there's some stuff that we wanted. I'm like, well, we got to pump the brakes a little bit because this is going to be a rental,
right?
And you don't want to do it with the most expensive furnishing. You're not going to get your money out. So
bingo.
Yeah. Other than that, was there anything else you wanted to cover?
I don't think so. I feel like we could go on forever about this conversation.
I think that wraps it up for us. This has been another episode of the Real Estate Sitdown. Thanks for joining us. Please remember to like, subscribe, turn on notifications, comment on our posts. We love talking about the comments.
And add us on Facebook, Instagram, wherever you can find us, add us. We'd be happy to be your friend.
Yep. We love it. All right. I'm Blair Berg, and this is Amber Perez.